So this is our normal Q&A slash backtest session that we do once a week. I'll try and keep this one a little bit quicker. I don't want to go over an hour. It's already kind of PMs. So anyways, if you're new here or if you haven't been to one of these before, basically any question related to ICT concepts, your model, psychology, whatever it may be that's on your mind, put that in the chat. We'll go over that. And I'm going to do a Friday mark review for the kind of the start. But obviously, anytime you feel that question boiling up, just put it in the chat and we'll go over through that. Sound good? So we'll look at Friday's price action, kind of what I was expecting, why I did not stream going into it, and kind of how to avoid the day, I think, because of just very difficult price action coming into it. We had, so going into the morning, I was slightly bearish. If you look at, let's go to the 4 hour here. So the 4 hour, we swept out the previous week high, also tagging into this daily inefficiency marked out in red here, which is a premium gap on the daily. I suggest you go back in and look for where that is. But trading up into, let me actually switch to do not disturb. You can't see my screen? Is it on for everyone else? You may have to just click off of my name, and then you'll see the stream. So like get out of my little like profile thing, you'll see it. Anyways, we're trading up into the ERL from last week. We've got the premium gap. So both that is normally a signature for reversal when we have ERL and IRL paired into it, plus time of day and things like that. Definitely a weird weekly profile. The past 2 weeks have been quite difficult for weekly profiles. We had this beautiful run from April, basically down from here, where we had one really good week, another really good week, another really good week, another really good week, and then kind of 2 weird, kind of choppy consolidation weeks, which is perfectly fine and expected. But that just brings about harder price action to trade, right? We're then looking for, instead of weekly profiles into daily, into session profiles, it's going to be more daily to session profiles. Maybe kind of pairing in the previous day, but normally you're not going to be able to say, oh, it's a Tuesday low of week, so we're looking for Wednesday, Thursday continuation. It's just going to kind of be a day-to-day basis. In terms of a bias, it's going to be daily to session. That already drops the probabilities, obviously, for the week. And most of the trades are going to be having to, be scalpy or less kind of movement. Now on Tuesday, majority of that range. You can go back and watch the recording, which is posted in the YouTube vids. It's actually on my YouTube channel publicly, where I basically took the low session from Tuesday and wrote it up until lunch, which gave me a good 7.7R total move. And then Wednesday, I took no trade. Thursday, I took no trade on demo. I took a loss on my actual accounts, which were, it was I think a 9-to-1 trade, and I got stopped out by like 4 points, and then it ran all the way to my TP. So just unfortunate price action. On Friday, so Friday going into it, I just was not super interested in finding a move, if that makes sense. Where if it didn't offer me anything, I was fine with it. I think it's definitely one of those days where I'm looking back at it, and in hindsight, it's definitely just one of the ones you want to skip. We had 8:30 news, we had 10 a.m. news. That being said, don't use news drivers as, oh, it's red folder, therefore we have to have a move, right? On paper, that kind of stuff will work. But as you've seen this week, as you've seen previous weeks, that's not the end all be all, right? The economic calendar does not tell you everything you need to know. It's based on the economic calendar, it's based on the higher time frame, and it's based on the lower time frames. All those things combined together will give you an understanding of if a day is going to be high probability or low probability. When I talk about probabilities of the day, I'm simply just talking about, is the New York session going to move one directionally and expand with time and price precision? All right. So as you go into Friday, let's look at this inefficiency here, which was reused as originally as a bisi. We extend this out. All right. We traded down. We closed below it there. And as we were retrading into it, coming into Friday, I had a bearish bias. So I was looking for this sell stop pool down in here. But I was kind of flat coming into it. So I was bearish on the higher time frame. as we go into the lower time frames on the 1 hour and things like that, we had taken out the previous daily low there, as well as retraded into some of these inefficiencies, which were just traded into with a wick. So to me, it was, as I was coming into this, I see kind of this weird consolidation building here where we had a little bit of low resistance there. We've got this internal range gap we could be marking out. We also the fact that we just ran out the previous day low and the Wednesday low coming into the session. And then on a 15-minute chart, I'll show you kind of what this tariff news was doing. That to me also looks slightly bullish. So I was bearish on the higher time from the 4 hour. On the 1 hour, it's kind of flat. And on the 15-minute chart, so notice this pool here is Tuesday's AM session low, and then this would be Monday's, basically just the Tuesday daily low. So both those are important time-based liquidity pools that we could be looking for. On the 15-minute chart, let's turn this off. 15-minute chart, same kind of thing. We've got Friday opening up here, staying within that 4-hour imbalance, dropping down, and tagging, which you notice, so this is the sell side here. All right, tagging this low, wicking it, and then coming back into, obviously when 8:30 started printing this way. So higher time frame, I'm bearish or slightly break like flat. Lower time frames, I'm bullish, more bullish than bearish on this. So anytime obviously you have conflicting data or it's 50-50, immediately you're that's the definition of low probability, right? What do retail traders do? They just look for buys or sells, right? You can flip a coin, you might as well get a better probability of what the price action is going to do. So anytime you're like, yeah, I have no idea where the higher time frame or the lower time frame are moving in sync with each other, or where the one-sided directional price movement is going to go, it automatically is low probability. Okay, so I have two options. Number one option is to skip the day, which is, when I'm looking back at this is probably a day that I would favor to skip. Number two is to look for scalping kind of moves, especially if it's going to be a swing to Z or seek and destroy day. Scalping moves during macro times and kind of just towards low resistance liquidity pools right when it's going to be tagged is kind of the way that I look to trade. I'm not trying to get bottoms, tops. I'm not trying to get session low to session high. I'm just trying to get some of the move and be done with it if it obviously allows me to. So that's what I was looking for on Friday. I'll show you the executions kind of later into the video. But as we look at 8 a.m. in here, obviously dropping down, taking the sell side. This was not the news. Okay, this was the tariff kind of the tariff news, I guess it is, but it wasn't the 8:30 news. Okay. Let's get into the lower time frames. Let's look at the 5-minute here. Let's clear some of this up. So on the 5-minute chart, obviously coming into it, we've got the low resistance buy side here. And I want you to just notice that kind of how this news is playing out. So this would be our 7 a.m. to 10 a.m. is our New York open session, right? It's not the kill zone. It's not the static session we normally look at, but between 7 to 10 is our New York open kill zone. Even if we don't look at it as a kill zone, if this is tariff news, anyone who shorted it here, anyone who shorted it here, anyone who shorted it all in here, where's their stop going to go? Right at this level of resistance that retail normally sees as very high quality stop placement. We know there's going to be a lot of liquidity built into here. Okay, so we'll look at that as bias of liquidity. We also actually have the PM session high up here. Either way, this also would be the current daily high. So both of these are kind of, it's not exactly the perfect time-based, but it's enough of a time-based liquidity pool that we qualify that as buy side or even minor buy side. So we come down, sweep the Asian low and wicket and start to trade up. Got inefficiency there being dropped into during the this macro window. So on the lower time frames coming into 9:30, I was bullish, just looking for a scalp to these highs up here. Okay, so I know the higher time frame is kind of funky. The lower time frames, to me, the order flow was bullish coming into the session. So looking at 9:30, I'm looking for that standard open, low, high close, kind of for the session move. And like I said previously, if we don't have the week, we're looking preferably on a high probability kind of move. We've got the week, we've got the day, we've got the session all lining up. In very low probability kind of scalping moves, we don't have the weekly bias. We don't sometimes even have a daily bias. we have just a session bias. Where's the session going to go between our static window of 9:30 to 11 o'clock? Where's that move going to target? Where's the most recent liquidity pool, and realistically the chart that we're looking for in terms of this kind of liquidity and inefficiencies is going to be the 15-minute bellwether chart. All right, so as we go back to the 15, obviously we can go over here. Got all this here, 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 etc. More importantly, this relative equal buy side, we're coming down, sweeping sell side, wicks it, order flow coming into it is bullish. I think it's almost a no-brainer to target, okay, this gap or this liquidity pool, even this gap up here, if we're really bullish. So that's kind of what I'm looking for in terms of the session move if it gives it to me. Okay, in this case, we kind of actually went from external range to internal range, and it's just very sloppy swing to Z. On YM, we actually did take the highs going into it, so it was a little bit better of a move in there. But we're not really going to look at that as, oh, it's a New York Open reversal profile. We're just looking at how NASDAQ is printing by itself. So that's what my bias was going into the session of 9:30 to 11 o'clock. That's what I'm looking for. Okay, I don't care what the 8:30 news is doing. I don't care really what the 10 a.m. news is doing. I mentioned in the daily bias chat for the private group on Sunday. I'll share the screenshot here. On Sunday at around 10:35, I said, notice also the revised U of M consumer sentiment on Friday normally brings more volatility than orange. I label it as red. So Friday, we had this 10 a.m. revised U of M consumer sentiment, which about a year ago or 2 years ago, from my recollection, it was labeled as red. And then either at the start of 2025 or sometime in 2024, it was changed to an orange folder. That's why on my Forex Factory, I'll have both the red, the orange, and actually the gray, just so you can actually see the bank holidays here. I have it labeled to just USD, but you want to be keeping both the orange and the red so you don't get thrown off by something like this. Now, the U of M revised sentiment is kind of a red folder news as it was labeled in the past. But I also just want you to remember that news is a function, right? News is not just something that's going to come in randomly and not do anything it's not supposed to be doing. It is used as a normal function of price. If price already manipulated, it's going to expand towards the draw. If price was expanding, sometimes it's going to be used as a retracement entry. We saw on Tuesday, we had 10 a.m. news. I was long going into the news. I know some people are kind of scared doing that, and there are times that you want to be avoiding trading news. Perfectly normal. Other times, I'm going to get in, and this 10 a.m. news is just going to send me right to my take profit. Okay. When I'm kind of either skeptical about the news coming in or I'm not confident about price action, I will be waiting for the news to just release and then find a scalp right after. And normally the rule for 10 a.m. is you just want to be waiting for that news to come out. For anyone who's new, that's normally what I suggest doing, is to just wait for the news to come out, find a scalp after that. And like I said, I'll show you my executions later in this video. Yeah, the 5 minutes, we'll look at the 5-minute order flow. So as we drop into 9:30, we know standardly, as I've talked about in probably every single video, 9:30 to 10, 10:30 to 11, right? That's what we see on every single session move, assuming it's not a swing to Z. Okay, so as 9:30 is dropping in, we have this sell side pool here. Just a short-term swing low, right? Doesn't got to be the daily low, doesn't got to be any sort of time-based liquidity pool. When we're looking at just the session move, that swing low that it's manipulating into, or if it's even a gap, does not need to be time-based. That's kind of important for future reference. If you go back and look at, if you're backtesting and you're taking screenshots like we should be, you'll see that when 9:30 is manipulating, for example, it's not always going to tag into a liquidity pool that's time-based. You know, it could be a gap. It could be just a random swing low. And that's perfectly fine. How do we then qualify? That's the manipulation. SMT, confirmation of reversal, 5-minute order flow, things like that. Okay. So coming into this move, I'm looking for, is there going to be a sweep on this low? SMT forming. and then some sort of internal range kind of soup that I can try and get in at this low and target these highs. So as we look at on the 1 minute chart, let's go back to 9:30 here. So 9:30 would be right around here as we're dropping into the 5 minute PD array. So the 1 minute PD array as I've marked out here. Between NASDAQ swing low here and then the YM swing low here, we have SMT. Okay. And as then it's trading below here, if I can mark this out. I don't know if you can see it, but between even this 936 low and in here, 930, 939. So you can't really see it on a 15-second chart. This candle obviously is a green printing candle. This one is too, so that would be part of a model if you wanted it to be. This 939 candle obviously is displacing, and 940 is displacing, but higher up and taking out this swing high on a lower time frame chart. You can see what that's doing. But lower time frame sweep and liquidity, SMT, in line with my bias. I'm going to use that as an entry point. Okay. I get stopped out there. So going into it, then I have to then wait for my rules is I got to wait for the 10 a.m. news to come out. The 10 a.m. news will kind of tell me what I need to know. If it then shoots down, obviously my bias is wrong. If it gives me what I want, then I don't want to be in a position prior to that news coming out and it stops me out again. So I'd rather wait for the news come out and kind of just give me what I want. Let's go back to the 1 minute time frame here. So you can see even on this kind of low probability day, 9:30 to 10 forming the low, and then right up here, you've got 10:30 to 11 forming the high. So technically that move is still there. All right, so I get stopped out on the 939 kind of turtle soup entry. In hindsight, probably something I shouldn't have been using on this kind of profile. If I was skeptical about the bias, I acknowledge that. And then as 10 a.m. news comes out here, we've got a re-entry opportunity during the macro time. And efficiency being traded into post-news, you can use that. And the scalping target would be this swing high here in line with time of day as well. So here's 10:30, as well as the relative equal buy side that I had annotated prior to the session. Okay, so entry in there, taking some off on there and there, probably back to break even on the runners here. And as we go back to the higher time frame, we've got the higher time frame sell side I've marked out. That would be kind of what I was looking for the higher time frame, right? So dropping down, taking out that sell side, and obviously the relative equal sell side pools here, and then coming back up into the range and taking out the buy side from the 7 a.m. swing highs. So this, I kind of look at this as a swing to Z profile, or not even a swing to Z, as kind of a seek and destroy profile. Very difficult price action where we're going from buy side to sell side to buy side to sell side. I have ways of navigating this kind of price action, and you'll see obviously in the executions as well of me kind of just practicing that. Normally with swing to Z profiles and let's say seek and destroy, right? Seek and destroy is kind of like this, where it's just going back and forth, kind of like this. I don't want to be trading on the internal side of this range because of the fact that it's not, I don't want to be trading in consolidation, right? No one wants to be trading inside consolidation. So I want to just be trying to get the moves right before it's sweeping this liquidity. If I can get a move right in here and target that high, that low, and then right in here, target that high, boom, and use the same model that we always see, that's what we're going to try and do for a swing to Z profile. And obviously, in the beginning, I would say most students, and I try and avoid these days as well, is to just skip these days. It's not something you want to be risking on. And I did not take the later trades, which you'll see on my other accounts. So this is just something to be mindful of. I'm just, obviously I have a demo account as well. So I'm still going to practice my skill of execution and practice kind of the different things that I may use in the future when these kind of days present themselves. So I want to have an arsenal of tools that I can use at any given time. And even if I choose not to use them, or I don't have to use them, the presence of that weapon gives me peace of mind and gives me safety, right? Right? Like if you are walking around downtown in a sketchy area, you'd rather have some sort of weapon than not have one. Even if you don't have to use it, it's just that safety of knowing I know how to do this. I know how to protect myself. That to me gives me better peace of mind than if I don't know how to trade these days. These kind of days are going to scare someone, right? You're going to operate then out of fear, because if something like this approaches you and you don't know how they work, you don't know how to potentially trade them, even if you choose not to. I think that it creates this uncertainty. It creates more fear where if you do try to engage on them, or if you do try to avoid them, any sort of movement that you're not expecting catches your attention and you want to jump in. All right. So I think if you learn these days, and I made a video 2 weeks ago about navigating and understanding low probability days, very, very good video. I think I got shadow banned after I talked about the Bank of International Settlements for too long. So those videos are not getting as many views as I think they should, but great, phenomenal video. If you've not checked that one out, it kind of gives a in-depth guide of how to approach these side of days. So I'll pull up my executions here and you'll see exactly the kind of thing I was talking about. Let me see if I can find it for you. I'll forward it to the this one right here, Spazzo. So that video right there is about 40 minutes long, but it's kind of navigating. It's more about swing to Z than it is about seek and destroy. Seek and destroy fits within swing to Z. Okay, seek and destroy fits within swing to Z, but the swing to Z kind of profile is specifically for the New York session. Seek and destroy is from open to close normally. So there's going to be different kind of criteria for trading it, but in that video, you kind of see even on low probability days, there's opportunities, and knowing how to trade it, but not doing it, I think is better. Don't fall into the trap of thinking you've got to trade every day just because you got all the arsenal of tools to trade every single day. It's a good idea, right? So here's the executions from the morning session, which I want you to focus on first, and then we'll look at the kind of scalpy things at the end. So this is the long I was talking about in here, where we had the SMT, buying it basically as it's taking out that high there, stop at the low, basically the rejection block low, got stopped out there. Okay, perfectly fine. Coming back into the session after the fact, or into actually after the news rather. Let's go back over here. So on a 15-second chart, the news comes out, boom, starts to displace up. We've got an inefficiency here on the 15-second chart. As it's dropping back into, there's a break over here as well. As it's dropping back into the breaker, and because this candle's opening, I'm buying it in there, putting my stop below this low. So this low here, as it's being retraded into, I do not expect it to take out this low. Why? Because there's a gap here in line with the breaker. That's also inefficient. So if it trades into this and forms any sort of swing low, this creates an intermediate term low, right? I'm also expecting this to be a breakaway gap, as this was left open as a breakaway gap because of the fact that the draw on liquidity is up here. Also the time of day, right? Between 10 o'clock to 11 o'clock, you're expecting one-sided price action and one-sided delivery. So especially if we have a high probability order block here, we've got this swing low where it's shallowly tagged into this. This should be used either as a breakaway gap or even as a measuring gap, right? And actually we can probably measure this here. And you can see there's a little bit of consolidation there. But either way, buying it there, buying more as it's dropping into the gap, buying another one as it's leaving now and forming this as an intermediate term low. And then selling them as it's taking out the buy side from the current session high, right? So here's 930, boom, 930 forms that swing high. That's the current session high. So if I'm looking for bullish prices, it's going to be open, low, high, close, 930 to 10, 1030 to 11. What time is this low formed at? What time is this high formed at? So that's what I'm looking for. So I'm taking it off as it's sweeping this buy side. What time does it tag this high at? 1028. Is that then, if I'm looking for a time-based scalp, is that then the right time for it to form the session high? No. So as it's running out this buy side, I'm then putting my stop or my take profit at this high after 1030. So when 1030 hits, boom, right on the clock, my take profit goes right there. Because that is the new high on the session, where between this static window of time, it should be forming that as a swing high. As it runs it out there, taking one off, I should have probably taken in hindsight. Obviously, I'm looking at this and kind of just speaking out loud of what I should have done in the future. Probably since I was scalping, should have taken off more there than just one. I had one there, two here, one here on my execution. It's not recorded, so you just have to take my word for it. If you don't believe me, it is what it is. But I won here, 2 on the buy side from the 7 a.m., 1 on the PM session high. So I got 1 filled out there. The other ones will then stopped out basically as the 1050 is forming this swing low. I'm putting it at the rejection block of that swing low. It's just getting stopped out there. So it's still in profit. It's still a profitable trade, and it does recoup some of the most of the losses from the one over here. That's the AM session move. Okay, and those are the AM session trades, both outlined with logic beforehand, as I explained in this video, and kind of what I was looking for. Now, the trades after this are kind of my practice for swing to Z. So like I said, with swing to Z, sorry, not swing to Z, seek and destroy. Seek and destroy, we have this kind of profile here. It's still going to be liquidity down here, still going to be liquidity up here. I don't want to be trying to trade it in the middle, as normally we're going to get these kind of internal stop runs, a lot of consolidation, and then it'll start to move. I want to capture this section here. Okay, so if there's some sort of important higher time frame POI that I can try and scalp it towards using time of day, that's what I want to be looking for. All right, so if this is a swing to Z profile, we know it's supposed to be leaving the consolidation after 12. It's not going to leave before that. So as then it's trading down, let's go back to the 1 minute chart and you can see it better. Got the higher time from sales liquidity. Let's go back. Right here, right? Yeah, right here and here. So as we are taking out the AM session low, so as we take out that AM session low and we start to displace and close below it, entering in short there with the same kind of logic of we're going to go for higher time from liquidity pools, given it is a seek and destroy profile. So selling it there, buying it as it sweeps this sell side right here. And then as it's trading back up, I was not looking at the charts at this point. I was away getting my watch fixed. As it's trading back up into the range, we've got this liquidity pool up here, which is our tariff high. We'll call this just tariff high and the current daily high. As then it's dropping into this on the macro on close. So the macro on close is between 1550 and let's say 1600. Technically, it's a little bit different than that, but we'll just call it macro on close between 1550 and 1600. We've got the current daily high up here. It dropped, trades into it. I think we had SMT below these lows as well. So as it's forming that SMT, I'm basically buying it within this gap here. And then as it's trying to displace up and take this out on a 15-second chart, I'm buying it there, selling 2 on this high, and then selling 2 just as a stop loss, kind of trimming aggressively to that swing low and selling it off there. So these 2 scalps at the kind of the ends of the session are just, like I said, this kind of seek and destroy. Just try to scalp it towards higher time from liquidity pools if it's offering me to it. This is not part of my individual model. This is practice for me. So don't look at these as high quality trades. Don't look at this as something to replicate. Look at more at this trade in here and this trade in here as something that, obviously, as you've seen me do day in and day out, that's the kind of trade that I like to take. This is more practice for me, as this is my demo account. I like to use this as practice too. So that's this and this going back up into it. So overall, last week for me was slightly negative. This week was positive, obviously, from the trade from Tuesday and then the one from today. So overall, not too bad. If you want to look at the account history for this specific one, there's the account history there. So the loss from 2 Fridays ago, the last Friday, this is from Tuesday, I believe, right? The 27th, yeah, Tuesday. This is the one from Friday's trade there, the loss. Then these are the trades from, right here is the one from the AM session. This is the one from the lunch session. This is the one from the PM session. So not too bad. And I'm not probably going to do a lot more of the kind of these ones in here, but still good for me to practice. All right. So hopefully that kind of clarifies some things in terms of kind of Friday's price action. I found it very difficult, at least for me, to kind of get these larger moves. So I assume many others probably found it very difficult to see Obviously, we're staying within the range of higher time frame to lower time frame swing points. So that itself is going to be very difficult to be getting any real moves. If you're not looking at this from a scalper's perspective and you're demanding higher time frame buy side, kind of as I was in a sense, you're not going to get filled out. You're going to get stopped out on a run, or you're going to be break evened, right? And if you're not taking partials on these kind of days, it's going to, in this case, it is going to hurt you compared to other days where we're actually expanding the session. You don't want to be taking partials prematurely. In this case, I think any sort of low-hanging fruit on a 15-minute chart, right? Since we're looking at a session move, this swing high here is a 15-minute swing high, as you'll see. That is a 15-minute swing high, so it does count in terms of a target. So 15-minute swing highs for the session move is kind of what you're looking for. 15-minute gaps as well. And overall, that's going to serve you the best for kind of these scalpers days, right? So if you can't avoid them, I think you avoid them. But if you know how to approach them, I think, to me, it makes it easier to avoid them. Where I don't want to be risking capital, first of all. I don't want to be risking mental capital if I can avoid it. Where, if I have to trade these days every single day, it's going to kill me. So once in a while, it's fine. But that's like on Wednesday. On Wednesday, I didn't take any trades. Wednesday, I kind of knew where it was going. I set in the daily bias, I'm looking for bullish prices going up into that previous weekly high, and it runs it out right at 9:30. Runs it out. I didn't see any high quality move in here that I wanted to partake in, and as it drops back into the range, this is an external range to internal. I don't want to be scalping it back into the range either, right? And you'll still see there's high quality moves in here, right? You can still see everything. You can see a gap in here being traded into with the 5-minute breaker over here during the backward time. It's all still there. Do I want to be sitting within all of this? No. Do I also want to be, if I trim my stop or if I'm watching this consolidation, it's going to drain my mental capital way faster than it normally does, right? So you're going to have a lot more emotions starting to rise as soon as you hit this 0 point, right? You're going to have a lot of emotions in here, Sometimes stupid decisions are being made below that line in the sand. So as much as you can try and avoid these days, once in a while, obviously it's fine. And also, as you approach August, having some sort of low probability kind of model, I think, is beneficial. Just so, when August rolls around, when December rolls around, things like that, you're not worried about, am I going to find a move? Am I going to meet my requirements for this eval or this funded, whatever it may be? You still got some tricks up your sleeve that you can obviously defend yourself with. But when we're in spring, and we have moves like Tuesday, right? When we have moves like this, why not just focus on these moves? It's going to be so much easier to trade, number one. Number two, it's going to be so much easier to manage your mental capital for these days, where even if you take a loss on this, it's so blatantly obvious to see where you were wrong, where it's very easy to correct. Meanwhile, a day like Friday, a day like Wednesday, if you are wrong, it's going to be much harder to say, where should I have gotten in? Where should I place my stop loss? Where should I put my TP? And what you'll find is normally the conclusion you'll come to is, I'm probably not going to be able to see those things. So if I can't see them, the best thing I'm going to be able to do is just to skip them altogether, right? That's the conclusion I came to. In terms of this kind of profile, I really don't want to be trading this kind of day. Although it's 8:30 news, although it's 10 a.m. news, coming back into it, if I had to do the day over again, if I saw the higher time frame, the lower time frame was like this, I guess my number one option would be to wait for the 10 a.m.s to come out and just take this trade here, right, and just be done with it instead of trying to take the 9:30 or just to skip it altogether. I think both of those are valid opportunities. If you do not take a trade on this day, I think that's better. And obviously, following the rules is going to always take priority over a P&L, right? So, yeah, I think for the most part, that's what I wanted to cover. Obviously, as well, if you start to engage in these days, when you have a developed model, the only times you're really going to take a loss is, number one, when you read the bias wrong, or number two, when you misidentify a or a high probability day. So, if you got your model down, you've rinsed it, you know exactly how it forms. The only time you're really going to take a loss, I mean, I guess mismanagement of the trade would be another one. The only time you're going to take a loss is either you read your daily bias wrong. That's fine. Why is that fine? Because you can go back in and you can fix that. You can learn from that. Number 2, misidentify a high probability day. This is the one that if you are going to blow a funded, if you're going to blow an eval, and if you already have a model, this is the one that's going to kill you. Because number 1, if you read a bias wrong, you take a trade there, you can normally easily fix, okay, this is why I took a trade, why it was wrong, how I can fix it. Boom, right? You're always learning. Number 3, mismanage a trade. Oh, I just placed my stop loss in the wrong spot, or I just got, I trimmed it too aggressively on this kind of profile, which I shouldn't have been doing. Something fixable like that, right? Like on Thursday's trade, for example, on my own account, 9-to-1 trade, scalped it, or I got in, I got stopped out. Just because I placed my stop loss a little bit too tight than where it should have been. And as I go back into it and learn from it, yeah, I should have put it either at that swing high or above the gap of where I was trading into. Probably shouldn't have traded on the 15-second chart prior to the 1 minute IFVG forming. Things I can fix, right? I'm not perfect. You aren't either. So as much as we can learn from our mistakes and constantly grow our intuition, maybe not tweak our model, but just instead just grow our intuition, it's going to be beneficial. Number 2, on the other hand, when you misidentify a high probability day as low, or misidentify basically a low probability day, that's the one that's going to kill you. Where basically you find a bias, you think it's confident, you take a trade, you think it's confident, and then what happens is it may start to move in your favor. And then you're like, oh, maybe this is one of those times where I can take a second trade or a third trade. And then boom, it comes back and stops you out again. Then you're like, oh, maybe that was just random. Boom, you take a third trade, fourth trade, 5 trade, 6 trade, 7 trade, and then eventually you're over trading, over leveraging, and there goes the account. So number 1, you have to realize that losses are not an attack against you. It's just an opportunity to learn. Hating to lose is hating to learn. Number 2, sometimes when you lose, you won't know why you lost until the answer key is dropped, right? If the answer key for me is normally available at around noon, I kind of know by noon what's going on, what the profile is giving me. So sometimes when I take a loss, I won't simply know, not that I don't, I may have an idea of, okay, I think it's going to go here. But my rules are going to keep me safe because sometimes I'm not going to be able to identify that. And sometimes you won't be able to identify that either. So you have to wait then for the answer key to drop at noon or at the end of the day, whatever it is for you. And when you go back in, you read, okay, this is what happened. This is actually how it produced this model. Then you'll be like, oh, either this is the trade I should have been in, this is the bias I should have been in, or you'll be like, yeah, this is a day I blatantly want to skip because it's just up and down, this kind of price action here. I don't want to be trading that. If you see this kind of day, don't look at this as, oh, how can I find a model in there? Your end result should just be skip, right? So don't look at, when you take a loss on these kind of days and you actually have a high probability model, these are the kind of examples you're going to take as a loss, right? You either mismanage the trade, which kind of you can cross this one out as you get more and more refined stop loss placements that are mechanical stop loss, meaning if I get in here, my stop is always going to go here. You're not going to mismanage it. So you can kind of cross that one out. So then it kind of just becomes these two, where you read the bias wrong or you misidentify it as a low probability day. And that's the one that's going to hurt you the most. And that's the one as well where your ego is going to come in, right? Oh, I think I know where it's going. And then it doesn't work. I think I know where it's going. It doesn't work. It doesn't work. It doesn't work. And you just keep pushing until the brakes fall off. So as much as you can avoid those days in the beginning, and even as a seasoned trader, the reason you take a loss, sometimes you're not going to know simply until end of the day. All right. So any questions that I missed, I'm going to check the chat. Or if you got any questions, obviously you can post them in the chat. This is a Q&A. Nothing I missed. Of course, yeah. On swing to Z days, you prefer to trade only around 12. So I got number 1 is obviously skip them. what I've seen is over the time, right? Me trading a swing to Z profile, my win rate decreases drastically. Obviously my RR decreases drastically as well. It may be only averaging a 2 or 3R instead of something higher, or maybe like a 2R. So number one is to skip it. You already know that, and maybe it won't be the answer that many want to hear. Number two, I'm either looking to trade it early or late. Nothing in the middle. Early or late. So either on a swing to Z day, the first 20 minutes, normally 20 to 30 minutes, opening range will still move. And you either can get in right where you think 930 is going to go, or right maybe where the 950 is going to offer you. The problem is if you get on a 950 during a swing to Z, you may have to end up holding it all the way until 12 until that drawn liquidity is met. In that video right above where your comment is, identifying and approaching low probability days, I tell you kind of how to trade those days, and I give an example. So if you watch that one, it'll give you a little bit more of an in-depth answer. But yeah, either I trade really early, sometimes even prior to 9:30, right? Like even I don't wake up at 7, but sometimes you can find moves there. So either really early at 9:30 and 10 and scalp it, or really late, kind of either a last ditch macro effort as a scalp, or even the 1150 macro, which is where I expect, okay, after 12 o'clock, it's starting to leave that range. Therefore, I can start to kind of find a movement even towards the extremes of that consolidation, if that makes sense. How do we know price action retracement is over and now is expanding? You've got two ways. You've got number one. So let's look at kind of like this, right? If you've got, whoops. All right, we've got a gap here. You're asking, okay, how do we know it's going to be done with this retracement leg? You've got number one, you've got the sysd. You get some sort of kind of confirmation of order flow, either through, we know our confirmation of order flow, and this is fractal as well, so you can use any time frame, bias, session, lower time frame, retracement, it all works there. Number one, MSS. Number two, sysd. Number three, IFVG. This is the order of strength. So if you have a shift, that's the strongest. If you have sysd, second strongest in terms of my perspective. IFVG normally will happen before these two. So sometimes in terms, it's not the weakest per se. It's just for a lot of people, that's going to be the earliest one that happens. So this goes from earliest to latest. So by the time you have the MSS, that's why it's the strongest. It's forming the latest. So you kind of already know everything is lining up by that point. Key is displacement. So if you have displacement through that level as well, it's beneficial. So how do we know the retracement is over? Tags into that PD array at a key time, displaces away from either the retracement high or there's some sort of PD array and has displacement through that retracement high as a shift, sysd, or an IFVG. As it displaces and forms, obviously, more PD arrays on the way up. So if you see like a bullish order block forming here, if you see a gap forming here, etc., at that point, you're using the 3 PD array rule, which is if 3 PD array are violated, your ass is next. So if you see a gap here, an order block here, once you start to see that kind of displacement, then you will know, okay, that retracement is most likely going to be over. How do we align time frame on that rule? I don't know what you mean. I'm gonna, for the PDF guys, this actually is relating to one of the models I'm gonna talk about. I know I've been teasing it for the past 2 weeks. I'm gonna come up with a model about this, but how do we use time for alignment? I don't know. I don't understand the question as much. If you can clarify. About the IFVG, shall we be looking for the premium of premium leg and bearish examples? So if we're looking for an IFVG, right? Let's say this is the session move, right? This is a session perspective. Okay, we're not looking at it as a retracement for the session move. The IFVG is normally going to form at the low end here first, we're looking for displacement through there. Let's say this is the 5-minute chart, okay? Then you'll have the SysD maybe like here or something, right? And the shift will be like up here or here. So it would be like discount of this discount leg, I guess, is normally the IFEG will form. And then, yeah, for bearish, it would be normally at the top where you normally will see the BPR, right? So where you see kind of like this, IFEG up there, or even up down here. There's some other advanced ways you could even look at it, but I'm not going to get into that because it's very specific. So that's like you could if you wanted to, you could pull it from the breaker leg, but we don't look at that normally. That'd be more of like a Reaper IFEG. What's a PD array? Can you explain it, please? It's just a signature of price. So there's about, I want to say 8 or 9 different ones. If you want a whole list, I suggest watching Core Content Month 4. I'll leave a comment there. Core Content Month 4 will have every single PD array that ICTs released. And if you're really struggling, don't watch this market review. I would say just go back in and watch the 2022 mentorship first, and then you can come back here. And these concepts here are more advanced from ICTs learning, so it won't make as much sense unless you have a core foundational base to be standing on. When do you try and look for scalps? Wouldn't trading a low probability day and looking for scalps like yesterday would get you smoked because it's more likely to consolidate? No, that's the exact environment I'm looking to scalp. I don't want to scalp a high probability day, right? Like, shout out Dragon, but like Dragon was trading negative RR on a unicorn. I'm giving him as an example. Dragon, if you watch this back, I love you. I'm just saying for the example, I wouldn't want to be scalping on high probability days, right? I want to be scalping on a high probability move. So trading a negative RR on a unicorn setup just doesn't make any sense. Neither does scalping on a high probability day. If I know where the session is likely to move with high conviction, I want to be getting in here, getting out here, because it's going to move one directionally. On lower time frame price, if it's consolidating like a swing to Z, low probability, it's just going to be doing this kind of, or maybe like this, right? So why then wouldn't I be able to get in a larger move? I could, right? I could get in, try and get in here or here and trade it up. The problem is the chance of me then getting stopped out because of my stop trimming rules is quite high, right? I'm most likely not going to get in a trade here and leave it at break even just because of the way I've trimmed my stop. Obviously, that would be another way one could trade it. So I prefer that if I'm just getting in a trade like from here to here, right? If I'm getting a trade right there, that's what I want. So to me, it limits risk. I'm dropping risk on a deal like that. But when you get your fill in, it's more likely to consolidate on your entry or wick you out. No. At least if you're using the right PD arrays, right? If you're just getting in seemingly randomly, then you will get stopped out, right? On your thing. I'm not saying I'm not perfect, right? I'm not saying that the entries I'm using I'm never getting it stopped. But it's more of just when I'm trying to scalp, it's going to be low probability because of the fact that, like I said, I'm trying to get it. If liquidity works like a magnet, if we say, okay, the buy side's right here and we're obviously down here, I don't want to be trading it because it could come up here, deeper trace, come up here, deeper trace. If it's then within, let's say, you have an implied dealing range here. If we are within the upper, around, or above the 0.75 of that implied dealing range, what's going to happen to the 0.75? The silver bullet, right? Silver bullet, we know it to be multiple different things, but when we have the low to high, that consolidation range, this 0.75 is where we see the silver bullet normally in combination with a bunch of other stuff. So if I'm trying to scalp, I'm trying to get these extremes of the ranges here. Not trying to get it from here to here, but more this move to this move, and that's it. So that way, if I do get stopped out, it's obviously very, very high probability. And I'm also relying on time of day. So it won't just be trying to consolidate, like I said, if I'm trading a swing to Z, for example, getting in early, getting in very late. That's it. So the scalp at that point, there's still going to be volatility to be used, right? Especially right at 9:30. Still volatility injection that I can use towards the closest DOL. I don't need to know where the session or the day is going. If I just know where that little time section is going, get in, get out. And I'm also trading normally on a 1 minute or sub 15 minute, sorry, so, sub 1 minute chart. It's like 15-second. Voice drop. May have to restart. Just leave and rejoin. We should be good now. I don't know. Give it a sec to rejoin. Good now? Okay. Yeah, so for the scalps, that's what I'm looking for, and it's going to be on a 1 minute or 15-second chart. Scalping just kind of this larger move, and that way I'm using these ultra low time frames, which is going to seem scary, but if I'm using for a scalp, that way I can get a 2R plus with a good entry. Instead of if I'm trading a 1 minute or a 5 minute, for example, I'm not going to be able to get a really good entry on a PD array in here because it's simply not going to exist on that chart I'm looking for. Does that kind of make sense? So it's that's why I say it's normally I only started doing that like recently. The first like 3 years, it was just something I was like I either lost on or just would I mean I would try and scalp it, but not with this a lot amount of precision. So I would just say it's something you avoid in the beginning because it's just not worth your mental or physical capital. And then later on, if you do choose to scalp it, that's the kind of just looking for this move here, or this move here, or like I said, this move here, or this move up here. Sound good? Yeah, this one right here. Yeah, yeah. That's all I'm trying to get. This is a little this is in the middle. So this is definitely a weirder scalp. That's why I don't think it's really swing to Z, but yeah, yeah. Core content month 4 will be on ICT's YouTube channel, not on mine. So ICT's YouTube channel, core content month 4, watch it from top to bottom. Yep, this is recorded. I'll post it later. I would like to go why you don't implement Asia this night was a wild range about my concern. Will not New York not be choppy? So I don't use Asia. Okay, well, let's clarify. I do use Asia for session liquidity pools. I don't really use Asia in terms of identifying a daily profile because to me it's too not random, but it's for what I'm looking for. It just doesn't matter. The times I'll look at it is for maybe classifying like a low probability day, right? If we got Asian high and low ran up by London, and then London high and low ran up by New York, terrible day. But if Asian is moving, for example, I could give 2 rips about it. Like if we look at like a day like Tuesday's price action, right? Tuesday, like I'm not using this as any sort of indication of what my bias is going to be. I'm just looking at from midnight to now, what's it doing? London, going to New York, things like that. That's just kind of my style. I do briefly look at it. Sometimes I just can't articulate certain things. If I do like a live daily bias markup, like prior to session, maybe I'll try and incorporate it there. But it's not really something that I pay attention to. I almost just act like it doesn't exist. Like in my mind, price action is still price action, so it still matters in some sense. But if Asian is doing something, it's not gonna be nearly as important as what London is doing because there's not a lot of liquidity going on in here or being printed in here. There's not a lot of movement normally going on in here compared to London. It just kind of goes in terms of order of volatility. This is the lowest. This is the second highest. This is the third highest. So most times it's just going to be consolidating, and when it consolidates, that's best. If it moves a great deal, it doesn't really matter to me a whole lot, because if it does move a whole great deal, I'm not going to be the one that contributes that to be low probability. If it's going to be low probability, I'm going to be able to see it on the higher time frame, the economic calendar, the lower time frame. Asian is not going to be the one that points me to the fact of being low probability. Does that make sense? Nor is it going to be the one that shows me it's going to move, right? So to me, Asian is just one of those things where we could say that everything has some reason, right? Like I could pull out the new day opening gaps from 3 years ago and say, oh, look how it's reacting off of this. But it's not going to be important for my specific approach and my specific analysis. Does that kind of make sense? Like there's certain tools that I use, and you could argue there's other tools that line up exactly with it. But for my approach, it's not something that I use, right? Because ICT, for example, 2025 mentorship, ICT is focusing mostly on real gaps, meaning new day opening gaps, new week opening gaps, first presentation gaps. He's pulling them from 3 days ago, opening range gaps. I don't use any of those stuff. Yet we're still taking the same trades. Yeah, we're still finding, you know what I'm saying? So there's different ways of explaining different movements. And it's really just what PD rays resonate with you, what approach resonates with you. This is my approach after I've watched all of ICT's content, basically. I've watched probably 900 of his videos. I've traded every model. I've traded every session. I've traded every macro on the day. I've traded Asian, London, New York Open, lunch, PM, every single one. So through that kind of process, I figured out what works for me, what doesn't work. That's why I don't use Asian. So we could say, yeah, it's working, and I'll use it occasionally for liquidity targets and things like that. But in terms of my overall analysis of importance, Asian is very low on the ranking. And I'll only really use it for any sort of analysis if it's required and it's blatantly obvious. Otherwise, it just kind of is there, and I don't really care about it. Sound good? Of course. No problem. Do you look at candles printed right before first presentation forms to market out correctly, as in the wicks of the candles? What do you mean? Oh, yeah, I do. Yeah. Yeah, if you're talking about efficient delivery, yes, I do. 100%. I don't even now. Don't associate that with just FPFVG. That is a technique you can use for every single gap. If you've not seen it before, I talked about actually this back in 2023. ICT just made a video on it. I'm not claiming to have put it out before ICT or anything. I'm just saying it's an old concept, but it's basically the understanding of fair value gaps. Everyone thinks, fair value gaps are the same, right? That's why something like a fair value gap indicator is going to do you jack squat for anything useful. So if you got it, remove it, because it's going to mark out every single gap. You don't want that. Fair value gaps are classified into multiple different ways, right? You've got bisis, you've got sibis. These are inefficient, right? These are truly inefficient. Buy side imbalance, sell side inefficiency. Sell side imbalance, buy side inefficiency. Then you've got volume imbalances. Then you've got breakaway gaps. These are efficient. Then you've got things like measuring gaps. You've got things like what? Well, liquidity voids. You've got things like real gaps, things like new week opening gaps, things like that. So that kind of fits into liquidity voids. So when he's talking about first presentation gap, but let's not even just use it as a FPFEG. Let's talk about any inefficiency. There are ways you classify them as inefficient or inefficient. If they're inefficient, in line with bias, in line with other things, you look at them sometimes to be filled. Efficient gaps you don't normally want to see filled or filled all the way, or they're not going to be respected as much as something like a bisi or a sibi. So I do look at the way that the candles are printing prior to it. That'll tell you everything you kind of need to know. And I look at that for every single gap. Okay, so BPRs, and there's a way, if you go back and watch, there's some videos. I might be able to send you them. I'll do it after the video because there's about like 5 different videos I'll send you. I shared it. If you're in the PDF, in the private group, anyone who's in the private group, if you go to the models and reviews page and you scroll up a couple of weeks, you'll see this tab here. I'll send it over. And this is basically the 5 videos that I use to kind of explain to anyone who's wondering how to read gaps. So which ones are inefficient? Where is it going to trade into the gap? Things like that. Those 4 there, you can watch and you'll see it. What's up, Creed? My goat. Yeah, just let me know, Spaz, or send me a DM or something, and I'll send you them over. Actually, the audio qualities in some of those, I'm curious. I feel like the audio quality in some of those are going to be so bad. Right, so we have a gap in here, right, into premium, right? So dips into discount or premium, quick, low resistance liquidity. Oh, it's actually, that's not that bad. Oh, okay. I did, Creed. I actually DM'd him like 2 days, like right before you had a call with him. I DM'd him literally like 2 days ago, and he sent me the entire thing. I haven't had a chance to review it all that morning, but it looks pretty good. He's correct, though. I probably won't use it just because, but he's killing it. He didn't send me the time stuff, so if you can send me the time stuff or whatever he said, I'm gonna jump on a call with him probably next week. So I'm curious as to what he has to say. Oh, I see. Got you. Yeah. So, anyways, when you mark the first presentation gap for fair value correctly in the wicks, does it have to inverse the whole actual fair value gap or just the part we mark out? I don't think I understand the question. If it's traded through, it really depends on the narrative, right? So if you're including the VI, if there's a first presentation gap with the VI, it should be traded through all the way in terms of a real classification of a non-inversion fair value gap for displacement. You want to see displaced through it. Other times you just need to see it wicked the high, and that counts as a violation of order flow. Yeah, just get the Daiichi indicator, right? Don't look into it too deeply. First presentation gap is just, I look at it as a regular gap. Yeah, I'll send you the vids and hopefully that'll help out. But it's just one of the ones I'll mark them out in the morning, but I'm not specifically framing a trade off the FBFEG. It's more of just an added confluence for me of, okay, if I've got this, and the FBFEG, then I'll use it. Can we go over risk reward math today? Are you being serious or? Oh yeah. Let me send you the sheet. Sometimes I can't tell if you're trolling. You got too many people in here. Yeah, what about it? Here's the sheet there. Didn't get filled once because I wasn't sure about this and started tripping because I thought I was missing something. Yeah, I'm if you watch those videos, it should help. And then if you got any questions after that, just let me know, of course. What about the math of it? No problem, Mary. Take care. Be safe. I'll make sure to post this soon. Oh, okay. No problem. Thank you. Yeah, that sheet there is just clutch. But yeah, you can have a what 3.5 risk reward, and you got a 22% win rate, and you're profitable. So it's that alone, and then the consecutive loss things. You also could just ask ChatGPT to make a larger one of this sheet, and it'll be a little beneficial, because then you'll get, it's kind of just chopped, right? There's only like 70% to 30%, so make it a little larger. What was the weekly profile in this week? So in the start of the video, I was saying how the weekly profiles for the past 2 have been kind of weird. To be completely honest, this is just, you could look at this as a Wednesday. Let me see. There's not really any, there's not really any weekly profile, if I'm being completely honest. Monday making the low, technically this would be seen as a classic, because Monday's making the low, Thursday's making the high. It's just a very deep retracement in here. I look at this more as, if we're looking at this logically, yeah, it just didn't expand through Thursday. And Maddie gave a good explanation for as to why this could be. I'm not saying it's true, but it is pretty reasonable. This run up here was due to the FOMC and Nvidia news coming out. So this kind of retracement and reset back into the range is kind of just this correction, right? You could also look at this as weekly high. So ERL back to IRL discount. So it's still kind of doing the weekly profiles we normally see, just very weird. Right, boom. You got high to buy side, and this is in discount here. Right, but in terms of its truly weekly profile, the closest thing that this is to would be a classic, because Monday low of week basically into Thursday high, but normally you see Thursday expand, and then Friday will consolidate back into the range. Yeah, that video there, the math of winning trading, great video. And we can also do a kind of a quick recap on that sheet as well. But basically, just a quick rundown. The top left of that sheet is your risk to reward compared to the win rate needed required to be profitable. The bottom right is the consecutive loss percentage for you to take loss after loss after loss per your win rate. That's really the only 2 parts that are the most important. So if you understand both of those, it normally just kind of eases the mind that you need for kind of just, for proper trading and proper mental management, I think. I know you reference this until Flux comes in and says says having a 70% win rate with the 5R. Yeah, 100% is doable. Yeah, I just prefer 1 to 2 and higher, but as of recently, my average has been around 6+, I think. Obviously not all of them in 1, but on average, that's the trades I'm taking. And you'll see it in the PDF group. I'll drop that model either today or tomorrow or on Monday. I don't know. I gotta make the whole video. Yeah, no, you won't see me trading less than 2R. Anyways, all right, so I'll wrap it up today. I said I wasn't going to make it more than an hour. I'm already pulling at an hour and 8 minutes. So I'll post this recording up on YouTube unlisted as usual. You'll find it in the YouTube vid section once it's finished. Obviously, if you got any questions that I missed, send me a DM. For those in the private group, if you missed it on Thursday, I'll be on vacation from the 4th until the 12th. I probably won't be able to stream as much, but if you have a one-on-one call, if you want to book one, I'll still be pretty free. I'll try and stream though. I'll have my laptop. I'll have a little mic, like a Rode mic. I just hope the Wi-Fi and the Airbnb is good. Otherwise, it'll just be predictions chat and that's it. All right, or maybe we'll do some IRL vlogs. Who knows? anyways. All right, so take care today. Get some well-needed rest. Get away from the charts. I know it's tempting to come back in and spend a lot of time on this, but review the week and then, take some rest and repair the mind if you need to. Okay? I will. I'll keep you guys posted as well. All right, so DM me if you got any questions that I missed, and I'll post this up on YouTube shortly. Sound good? So do the things that are necessary to succeed. I'll talk to you guys soon. Peace.